The market is going down, prices keep crashing, and the big question always is, does it make sense to buy now or rather wait later? Will the dip keep dipping? At what point is a potential floor really reached? Let's have a look at some statistical numbers. Let's use mathematics to figure out how much lower we might go from here. There are many different approaches, and they do come to similar conclusions. Have a look at the escape top indicator. Whenever this is high, it is a good time to buy. Currently, we are not yet at the historical heights that are needed to buy this dip. Or have a look at the Puel multiple. That turns green, or in other words, the miners tend to not make that much money whenever we are at the bottom of a bear market. Again, we haven't reached that yet. There are some metrics that are even going up. Over here is the realized HODL ratio. This tends to bottom out in a bear market. It tends to go up in a bull market. Now, why is this metric going up when we are currently crashing in the price? The reason is that this metric is measuring how much short-term trading activity there is. When the market is very, very calm, it also tends to be the best time to buy. When the market is rather active, that's the best time to sell. We have seen an increase in that metric recently because we suddenly see some long-term holders becoming active again. Wallets that haven't moved crypto for a really long time. Here's another metric that shows that the worst might not yet be over. It shows the net unrealized profit and loss in Bitcoin. Now, why is that metric so interesting? It's because it's very hard to value cryptocurrency in general, right? For Bitcoin, we don't have any regular cash flow as we have, say, with stocks or as we have with property. So we don't have any regular cash flow to put in relation to the investment amount. Instead, we have to look at other anchor points that the market might have. One of those anchor points could be just the average cost basis of the market. If the average market participant is currently in profit, in net unrealized profit, then some market makers might consider to take some chips off the table to realize the profit. When the average market participant is in losses though, and the long-term thesis for Bitcoin is still bullish, if we still believe that Bitcoin over the decades will go up, then very likely we will see less selling pressure. So the market tends to bottom out when most people are in losses, and it tends to top out at some point when we are in profit. And so that's why this metric is so interesting. How much is the average market participant currently in net unrealized profit or in net unrealized losses? And still today, even after the correction, the average market participant is in 36% profit. We still have some more way to go until we are at a potential cycle bottom. The average cost basis of the market is at $56,000. And in prior bear markets, we always went below that price level. So that was at the end of the Mt. Gox and Silk Road collapse, so at the beginning of 2015. That was also at the end of the ICO bubble burst, 2019. It was true during the COVID crash. It was also true after the FTX collapse. So if we are really entering a bear market, if something systemic blows up again, we are very likely going below 56K. We can also have a look at the current profit relative to the average cost basis and put this in relation to the volatility. Then we get the MVRV Z-score. It shows us how much we currently are in profit relative to how much the price is going up and down. And yes, this tends to decline over time as well. In other words, we are generating less profit relative to risk over time. So risk adjusted, Bitcoin is actually becoming worse of an investment. But again, we are not yet at the cycle lows. We are not below the realized price. Another potential bottom indicator is the 200-week moving average. Prior to 2022, we never really went below that moving average for an extended period of time. In 2022, however, we did, as in the moving average was at 24K and the price was at 17K. In other words, it's very likely we are going below that moving average at some point again. And that's currently at 55K, a very similar level to the realized price. So we have completely different models, right? We look at the average cost basis of the market versus just the momentum of the market with the moving average. Yet we come to very similar potential bottom. And 56 or 55K might not be the absolute bottom, right? We are likely going below that if we enter a true bear market again. Here's another anchor point. This is a logarithmic regression, also called the Bitcoin rainbow chart. Here, the lowest level is 31K. And this makes more sense, right? If we are falling below 56K and get another discount of 20-30%, we're getting closer to the 40 to 30K mark. There's all kinds of models, but interestingly enough, they do give us similar levels. The balance price and the CVDD give us something between 42 and 45K. And so it's all just a game of risk versus reward, right? Nobody knows where the price is going. We're just wondering what's the potential loss versus what's the potential gain. The reason for the negative momentum is the OGs. It's the early buyers that are currently selling. When we look at the wallets that haven't moved their Bitcoin for the last 7 years, yes, they did sell a little bit when Bitcoin hit 60K, but now, since we are at 70 to 100K, they are selling much more actively. Even when we isolate the medium-term holders that hold slightly longer than one cycle, so between 5 to 7 years, even they are now selling much more aggressively than ever before. By the way, if you're enjoying this video so far, then feel free to give it a like. It will help to spread the word. It will tell the algorithm to show the video to more people. Thank you very much. There are interesting aggregate metrics for that OG selling. For the whales that tended to hold a lot of Bitcoin, they tended to hold it for a long time. When they suddenly start moving their Bitcoin, they are destroying something called coin days. So it's simply just multiplying the amount of Bitcoin with the duration that it has been dormant for. So if you held 10 Bitcoin for 10 years, you're destroying 100 value years. That of course pushes up this metric. If you held only one Bitcoin, say for 10 days, you're only destroying 10 value days. The longer you have been holding Bitcoin for and the more Bitcoin you had in your portfolio, when you then suddenly move the Bitcoin, then you're destroying that, then this is going up. The whales, the diamond hands, they become paper hands. And that's not a good thing, right? It means that the investors with the highest conviction, they are exiting. And they tended to exit only when Bitcoin was very, very high in price. They simply just rebalanced their portfolios. There was an outlier in 2018 when we moved from 7.5 to 3K. That was an absolute capitulation by everyone. But outside of that anomaly, the coin days destroyed only tended to go up when Bitcoin hit new all-time highs. Now we have again another anomaly. The Bitcoin price is going down, yet the coin days destroyed is going up. Have a look at the realized hodl waves. Let's exclude the long-term holders and again see when this is going up. People are realizing gains whenever the Bitcoin price is going up. And that also happened this time. First when Bitcoin hit 72K, then again when Bitcoin hit 100K, and now it's going up despite the price not appreciating. Again, it seems like people start to panic sell. It seems like people are losing hope. It seems like people do not think that Bitcoin can hit 200K, 300K, 400K anytime soon. The long-term holders are exiting and they are realizing gains. And this time it's not just portfolio rebalancing. This time it's just exiting the system. The risk versus reward is not worth it. Potentially, we might be in a phase where the 4-year cycle becomes a self-fulfilling prophecy. Bitcoin has always gone this way, right? 3 bull years followed by 1 bearish year. Now it's time again to be bearish. And if enough people think that we will have a bearish year, then enough people are actually selling. And that selling leads to declining prices. So enough people think that something is expensive or something is cheap, then the price will indeed move in that direction. It's a self-fulfilling prophecy. Here is one reason why some long-term holders are selling now. There's a lot of correlation between technology stocks, so that's the line at the top, the Nasdaq 100 relative to the money supply, and Bitcoin, that's the line at the bottom. They both go up and down and up at the same time. Now, there are justified concerns around technology stock valuations, right? PE ratios are very high. There's the circular financing around AI companies. And a lot of the makeup of the S&P 500 is now simply technology. That went up massively in the last 5 years. And so if tech stocks come down, then Bitcoin will go with it. And that's especially concerning when we zoom out. Have a look at the Nasdaq 100 relative to the money supply. This year was the .com crash. So tech stocks went down by 86%. This was the global financial crisis. And Bitcoin was created after the global financial crisis. So it never really saw a real crash. It only got the COVID correction, but that was recovered very, very quickly. We haven't really seen a contraction of credit during Bitcoin's lifetime. And so maybe all of those models that we currently use for Bitcoin's price history, they might actually break. They might be too optimistic regarding Bitcoin's price development because we are just not looking at the full picture. We are just looking at this time window here. And imagine you were to invest in technology stocks just based on this data. If this is all data you had, you'd say that the worst that could happen to technology stocks is a drop of maybe 40%. But we all know how things can be much, much worse. And there are good reasons to believe that we will see something like this in the not so distant future. That, of course, would be extremely bad for crypto as well, because again, there is quite a bit of correlation between the Bitcoin price and technology stocks. Just have a look at the historical price to earnings ratio. This is when we were at the height of the dot-com bubble. Then we had the crash caused by dot-com. Then we had the crash caused by the global financial crisis. And this here, this is when Bitcoin was launched. Bitcoin only lived through a period of an expansion in the valuation of risk on assets. And that's maybe why even the biggest of the whales that continue to hold Bitcoin for such a long time are now de-risking, while they are selling off. Now, I'm not telling you to sell your Bitcoin. I'm not telling you at what point to buy. I'm simply just sharing data. You can interpret this any way you want. If you appreciate this, then feel free to give this a like and feel free to subscribe as well. I publish these regularly. Feel free to also check out the Premium membership. A link pops up here on the screen. This is where I share my own portfolio. This is where I share how I currently navigate this market. See you next time on YouTube or see you on Premium. Cheers.